Alright guys, in this video we are going to go over these broker software applications and the process of actually entering orders and executing trades, right? I cannot emphasize this enough. If you want to take day trading seriously, you're going to have to learn how these desktop applications work because executing trades and placing orders on a computer is almost always going to be faster than placing orders on a phone, and speed is everything when it comes to day trading, right? And this, the screen that you're seeing right now may look intimidating, but my goal is to, by the end of this video, for you to see that it's really not that intimidating, and for you to get familiar with the process of how these applications work, right? Because while there may be many brokers out there, and the font, the styling, and the color may vary across these broker tools, the actual usage and the utility is pretty much consistent across all brokers, right? And so here we go. The first thing you'll see is this box in the middle, right? It's what we call the montage. We also call it the level 2 box. Level 2 data is like the actual orders, or sorry, the buyers and sellers, right? This is where the actual orders are being entered, as I'll show you in a second. And so this is where main action takes place, right? But let's go back to ground zero, right? What is a market? A market is simply a matching of buyers and sellers, right? And so in this case, what you're seeing is that the buyers are listed on the right side of this, sorry, on the left side of this box, and the sellers are listed at the left side of this box, right? And so what you're seeing now is that the buyers, the best buyers, the highest buyers are willing to pay a price of $47.59 to buy the stock, while the lowest sellers, the lowest price the sellers are willing to sell for is right now $47.59, right? Obviously, this is dynamic and is changing second by second, right? But basically, the highest price that the buyers are willing to buy for is listed on the left, and the lowest price the sellers are willing to sell for is listed on the right, right? And so let's say I want to buy this stock, right? I want to buy 10 shares of the stock, Citigroup, at $30. And so if I enter an order at $30, you see this box on the top left side is showing my open orders, right? So I have an open order at 10 shares at $30. Why is it not getting executed right now and it's just sitting open? It's because no one is willing to sell to me at $30, right? Because there are buyers at $47.56, so no one's going to sell to me at $30. If I want to buy this stock immediately, I have to pay up a price the sellers are willing to accept, which right now is $47.55, right? And so you can actually just click it and it'll pre-populate this field, $47.55. If I place a buy order, boom, you'll see the open order is immediately executed, and now I'm actually in this position. So this box right here is showing my open positions, the actual positions and the stock that I actually hold in my account. So I have 10 shares right now, $47.55, right? Let's do the opposite now. Let's say I want to sell the stock, right? I'm going to sell the stock at $50. And I have an open order now, 10 shares at $50. Again, no one is willing to buy from me, and the order's just stuck open because there are sellers willing to sell at $47.56, right? And so if I want to immediately sell, I have to accept the price that the buyer is willing to pay, which right now is $47.54. So if I sell it now, you see, boom, now it immediately executes, and now I'm out of this position, right? Now I'm flat out of this position. And so this is where, like I said, all the action takes place, but this long kind of rectangle is also important, right? Whereas this box right here, the montage as I called it, is listing the buyers and the sellers. This rectangle right here is listing the actual orders that are being executed in real time. We call this the order flow, or the time in sales, right? Because it's showing the quantity and the price of the actual orders that are being executed, right? So someone just bought 93 shares at 47.50 cents. You see it's really fast, right? And so what's important is that as you get more experienced, you'll see that the acceleration and the velocity of the order flow can give you a lot of information about the imbalances in supply and demand, right? I'll get back to that later, but see, the chart is pretty self-explanatory, right? You see charts all the time, but what's an interesting perspective is that the chart is simply a graphical representation of the order flow, right? Because every time an order gets executed, it's being displayed in the chart. And so when people are trading chart patterns, they're not trading circles, triangles, rectangles, right? They're trading, the effects of supply and demand in the market, which manifests in these chart patterns, right? That's kind of a healthy perspective to approach charting, right? And you see that, this stock is trading relatively slow, right? You see the order flow is not that fast. It's like every couple seconds there's a new order. The buyers are not really moving. It's stuck at 47.57 cents, right? Because the stock is not being that actively traded. Whereas if you compare it to the SPY, look at how much more active it is, right? Look at how fast the buyers and the sellers are shifting. It's like boom, 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 right? The order is going through much faster, and so this is how you tell that the stock is, trading much more actively, right? Obviously, every asset is different, right? Some stocks are more actively traded, others are less actively traded, right? The last thing I want to show you is this tool at the bottom left. Sometimes, in order to execute a short position or short selling position, you can't just short every stock even if you wanted to, right? And the reason being is that sometimes these stocks don't have very small amount of shares available to be traded. And in order for you to execute a short position, you have to borrow stock from someone else so you can sell it on their behalf, right? That is what a short selling trade is, right? And so sometimes there's, these stocks, it's hard to find shares to borrow, and so you have to pay a fee in order to even execute a short position in the first place, right? So it's sometimes shorting a stock can be quite expensive, but if the risk reward is there, it may be justified, to pay that fee, right? So what you'll see is that right now, if I were to, for example, try to short the stock, my order will get rejected, right? Because it says the security is not shortable. I have to basically pay a fee in order to basically have the permission in order to place a short trade, right? You'll see I already borrowed 100 shares before. Now that I want to short, let's say I'm want to short 100 shares, right? It'll let me because I already paid for the permission to short 100 shares. If I want to short 200 shares, it won't let me because I haven't paid for the permission to short 200 shares. And so what do I want to do if I want to short 200 shares? Well, I've already paid for 100 shares, but I have to pay for 100 more, right? And so I use this tool to inquire. And so what it's showing me now is that it will cost 0.002 cents per share in order to basically pay in order to short this stock. And so I can accept this offer if I think it's worth it. I can pay the fee, and now I'm allowed to short 200 shares now. Before I was only allowed to short 100. And so if I place it before this order was rejected, right? And now if I want to place an order, now I can short 200 shares, right? And so if I want to enter a short position, if I place a short position at $1.76, it will get executed like before, and the same deal, right? And so this was kind of a quick tutorial on how to use these broker applications. From one, the montage where the action takes place, where you place orders, to the order flow where it shows the kind of in real time the orders that are actually being executed, and then the charts, which I said are the graphical representation of the order flow, and lastly the short monitor tool, which sometimes you need to use in order to execute short trades, right? And you don't need to use this all the time, right? Some stocks, like this stock, you need to pay in order to short, right? I can't short 300 because I only paid for 200. But some more commonly traded stocks, such as the SPY, for example, you don't have to pay, right? I can just, if I want to trade 454, I don't have to use this tool, right? Because it's some stocks you don't have to really pay a fee, right? And so it's only for the rare stocks with the low availability of shares available to be traded that you sometimes need to use this tool to pay for the permission to short a stock, right? And so that's basically it for now. That's a quick tutorial, and hopefully you get a better understanding of how these broker applications work. Again, your broker may have different styling, different colors and fonts, but the usage and the utility should be consistent, right? And so the best thing you can do is to fund a broker account with a small amount of money as soon as possible, and start placing small trades here and there. Just get familiar with the process of executing trades, right?